Well, it's not enough that interest rates are the highest they've been in 23 years, plus insurance, homeowners insurance is at a record high. But now we're faced with something that could impact 1,300 homes a day. I'm talking about the government shutdown. It happened for 34 days back in 2018, 2019, and it literally puts the brakes on closings around the country. Now, many people aren't aware that 20% of our economy, 20% of our entire economy is fueled by the housing industry. And I don't mean just home purchases or new home sales. I'm talking about the whole entire industry. So think about that. You have roofing, you have copper, you have plumbing, you have carpet, you have paint, you have all these industries and all these manufacturers. And the less people are doing things with houses, not just purchasing those houses, but purchasing rental property and improving their own personal houses. When the economy sucks back like it's doing right now for the housing industry, it has a trickle effect on the entire economy. And as a result of that, we see Lowe's stock is low, Home Depot stock is low, because at the end of the day, everything's fueled by supply and demand. So here's the deal. When the government shuts down, it shuts down the NFIP, the National Flood Insurance Program. You see, there are literally millions of properties, close to 5 million homes in the United States that rely on flood insurance, and they have to have flood insurance. And it's not so much as they have to have it because they want to have it because they're in a flood zone. You have to understand that if you have a home that's in a higher risk flood zone, you must have flood insurance. It's required by the mortgage lender. Now look, you can't blame mortgage companies. Think about that. If you're going to loan money to someone to purchase a piece of property and you're securing that loan with an asset, their house, their home, it just makes sense if they're in a higher risk flood zone to have it secured, a little bit more insurance on the property. Insurance specifically for flooding, because a lot of people don't realize that just a traditional insurance policy does not cover flooding of the property. Now, there are different flood zones for different areas, and the mortgage companies don't require you to have flood insurance. I'll share that with you here in just a second. Now, the different flood zones are A, B, C, and X. It's easy to remember. So A is the higher risk. That means you're in a 100-year floodplain. That doesn't mean it's going to flood every 100 years. That just means that there's a 1% chance every year of that property flooding, and that's considered high risk. Now, there's different variations of A, AE, but if you're in flood zone A, the insurance company requires you to have flood insurance, and it can run into the thousands of dollars a year. Now, the other is flood zone B and C. If you're in B and C, it's not required by the mortgage lender that you have flood insurance on the property, or flood zone X for that matter. However, you are still considered in a flood zone. A quick story, had a closing one time. The mortgage company was from Arizona, and they said, hey, this property's in a flood zone. I was like, dude, every property in southern Louisiana is in a flood zone. Same as most of Florida. We're in considered flood zones, but it's not the higher risk zones everywhere. So you have to know, you have to look at those FEMA maps and know exactly which flood zone the specific property is in. Now, I can give you some quick advice. If you're in an area that's considered a flood zone, don't go without flood insurance. Never go without flood insurance. I've seen properties that are not required to have flood insurance flood twice in the same year, none of which was from hurricanes, just heavy storms, heavy winds. So if you're in flood zone C or flood zone X, it will typically run you $500 to $600 a year to have flood insurance on a property. You can buy properties in flood zone C or X. They may not ever flood, but just in case, you'll want to have that policy in place. Now look, it's not just about flooding. According to the National Oceanic Atmospheric Association, that's a hard one to say, NOAA, we have hit $11 billion in destructive damages from natural disasters this year, highest ever in the history of the United States. So you see, it's not just flooding. We have fires, we have tornadoes, we have hurricanes, we have earthquakes. There's natural disasters that happen all around the world. So I don't mean to just pick on flood insurance, but what's happening right now is when the government shuts down, they can't issue flood policies. And when they can't issue flood policies, as I mentioned earlier, there's some 1,300 potential closings. These are houses that are closing. They're under contract to close. So they're not sold properties on the market. These are homes that are set to close, that their closings are going to be disrupted, if you will, just because the government shut down. But you know, one of the biggest factors in all of this, we've had fires in Hawaii, we've had flooding, you have storm surge, you have hurricanes. And with that, there's a little bit of wind blowing right now. And that's what I mean. The wind. The wind can be so strong that it pushes water in places. Like I'm in New Orleans right now, and in this New Orleans area, we have a 26-mile span across Lake Pontchartrain. There's nothing to stop the wind. And I've literally seen flooding happen without a drop of rain just because of the wind. So listen, before I go, I just want to thank you for the opportunity to share with you what I've learned over these 28 years of working in and on and around real estate. I hope it brings value to you and someone that you may know. If you're ever in the need of buying or selling a house, you can go to contactwayne.com. Contactwayne.com is a free service that we provide to people to help you in the process of basically buying and selling a house. So until next time, thank you and God bless.